Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be analyzing if Keurig Dr Pepper stock is a buy. Keurig Dr Pepper, stock ticker symbol KDP, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Keurig Dr Pepper. The parent company of Keurig Dr Pepper was initially founded in 1981 as a coffee company but later merged with Dr Pepper Snapple Group in 2018. The resulting combined company has its headquarters in Massachusetts. The company produces many popular brands including Dr Pepper, 7-Up, Snapple, A&W Root Beer, Canada Dry Ginger Ale, RC Cola, and Keurig Coffee. Interestingly, Keurig Dr Pepper has partnered with Coca-Cola at various times in the company's history to develop cold beverage systems. Today the company employs 27,500 people and is one of the largest beverage producers in the world. Now let's take a look at the price action. Starting with the 1-year chart, we see that Keurig Dr Pepper had a CAGR of about -16%. Zooming out to the 5-year chart, we see that Keurig Dr Pepper had a CAGR of 4%. Keurig Dr Pepper share price has been falling recently but has gained in the long term. If we perform a backtest comparison of investing $10,000 in Keurig Dr Pepper versus the S&P 500, we find some positive results. In that comparison with the S&P 500, $10,000 invested in Keurig Dr Pepper would have grown to $20,013 or a 12.6% CAGR versus $17,271 or a 9.8% CAGR if invested in the S&P 500. This demonstrates outperformance for Keurig Dr Pepper. However, a Keurig Dr Pepper investment would have been more volatile with a 22% standard deviation versus 18% for the S&P 500. Keurig Dr Pepper also outperforms the S&P 500 in terms of the best year performance, for which Keurig Dr Pepper grew 52% versus S&P 500 31%, and worst year performance where Keurig Dr Pepper fell 13% versus S&P 500 18% fall. In terms of max drawdown, Keurig Dr Pepper fell 21%, just less than the 24% max drawdown for the S&P 500. Keurig Dr Pepper also outperforms the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. Keurig Dr Pepper has clearly been the better investment over the past 5 years. Now let's hop over to market share and take a look at the revenue market share for Keurig Dr Pepper. So we come over here and type in the ticker symbol for Keurig Dr Pepper and see that the market share is 1.6% out of the publicly traded food, beverage, and restaurant stocks currently in the market. This means that just 1.6% of all eating spend goes to Keurig Dr Pepper. The 5-year market share CAGR for Keurig Dr Pepper is 0%. This means that Keurig Dr Pepper's market share has not grown in half a decade. If we start in 2019, we see that the market share was 1.6%, 1.7% in 2020, but then fell back to 1.6% in 2021, 2022, and the trailing 12 months. Growing market share is a key component of any successful business, and Keurig Dr Pepper is not. On the other hand, it is positive to see that Keurig Dr Pepper is not losing market share. Let's take a look at the fundamentals. Gross margin is 54%. ROE, I did not expect it to be this high. That is excellent. Revenue has compounded at around 15% over the past 5 years and has reached over $14.8 billion most recently. This is great revenue growth. Keurig Dr Pepper has the hallmarks of a decent company. Looking at cash flow, we see a 2% CAGR over the last 5 years for operating cash flow, while capex has worsened at a -16% CAGR. As a result, free cash flow is actually unchanged from 2018. Like many other beverage stocks, Keurig Dr Pepper hit peak cash flow in 2021 but has seen a return to levels held before 2020. Unfortunately, it seems that the downwards trend will continue. Weighted average shares outstanding have risen dramatically since 2018. The share count has gone from 1.1 billion shares in 2018 to 1.4 billion shares most recently. However, it should be noted that 2018 was the year the companies combined to form Keurig Dr Pepper, and the share count has actually not changed much since 2019. Ideally, we would like to see share buybacks, but no dilution in the last 4 years is not bad either. Now let's view return on invested capital. Return on invested capital has risen from 3.2% in 2018 to 5.2% in 2023. It is nice to see fundamental improvement in the company's efficiency. However, they have a long way to go to really turbocharge efficiency. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from -95 days in 2018 to -139 days most recently, Keurig Dr Pepper has gotten more efficient over time. The negative values indicate that Keurig Dr Pepper has over 4 months worth of value from the time of sale before they pay suppliers for the cost of goods they just sold. That is tremendous leverage. Now, let's look at Keurig Dr Pepper's debt. The net debt to EBITDA has fallen over the past 5 years, going from 8.9 in 2018 to a more manageable 3.5 most recently. No debt is better than some debt. However, Keurig Dr Pepper's debt level is not prohibitive in my opinion. Last, let's explore dividends. Current dividend yield is 2.6% with a healthy dividend payout percentage of 59%. Dividends per share for this company have grown at 11% dividend per share CAGR over the past 3 years. The only thing lacking from a dividend analysis of Keurig Dr Pepper is a longer track record of dividend payments. The fundamentals of Keurig Dr Pepper are not bad. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Keurig Dr Pepper. It is a beverage company with a gross margin of 54%. The 5-year revenue per share CAGR is 9% and the 5-year free cash flow per share CAGR is -6%. Declining free cash flow per share is not good. A return on invested capital of 5% is not great, but the trend is upwards, so I am hopeful. Next, the cash conversion cycle of -139 days is excellent. Concerning debt, a net debt to EBITDA of 3.5 means that it would take Keurig Dr Pepper about 3.5 years to pay back their debt. So from a fundamental standpoint, Keurig Dr Pepper looks pretty decent. Now let's switch our attention over to valuation. Keurig Dr Pepper is just undervalued relative to the S&P 500 with a ratio of 0.9. The price to earnings growth, or PEG ratio, is 3.6, indicating that Keurig Dr Pepper is significantly overvalued relative to their projected earnings growth. Even though Keurig Dr Pepper has grown revenue over the past 5 years, their market share has not changed. This indicates to me that their revenue growth is not enough. The valuation is also very interesting. The market is discounting Keurig Dr Pepper, presumably for the subpar revenue growth and falling free cash flow. However, the company still has some good things going for it. Return on invested capital continues to climb and the cash conversion cycle value shows strong operational leverage. Keurig Dr Pepper seems to be a solid beverage company. However, I am looking for companies with robust growth. For these reasons, I will pass on adding it to the watch list. Many thanks for watching. What do you think about Keurig Dr Pepper and its falling free cash flow? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.